welcome here on the Tradier Hub to our show, Coffee with Markus. This is where we'll have a coffee together, talk about trading, and I'll show you some real life examples of my trading. And we had a really super interesting trade today that I want to walk you through. You see, I have a special mark where it says everything is just good, good, good. Anyhow, so glad that you're here joining us live. Leave a comment if you're here because I want to show you what I have been trading today. And we're going to switch over to the charts. And if this is your first time watching here, let me just tell you very briefly the way how I trade, what I like to do. I like to trade the so-called wheel strategy. And we talked about this in previous shows here on the Tradier Hub. Basically, I am selling puts and collect premium. Then number two, I might or might not get assigned the stock. And if I am selling calls to collect more premium. And I want to show you a real life example here today of a trade that I did last week and today. So if you remember, we briefly talked last week that I took a trade on Devon Energy. That's DVN. And this is where I decided to sell the 45 put expiring last Friday. So what does it mean? It means that I'm receiving a premium. If DVN would stay above 45 by Friday afternoon, I would just keep the whole premium, nothing happens, and I can do the same thing again on Monday. However, if Devon Energy moves below 45 by Friday afternoon, I get assigned and I have to buy the shares for $45. And this is exactly what happened. If you take a look at this here, you see that basically, let me just remove this. On Friday, we closed at around 44. So I got assigned and had to buy Devon shares, and they appeared in my account this morning. So now the question is, what do I do with this? Well, in this where we go to the next part of the wheel where we are selling calls. And first of all, this is where I like to see, okay, what exactly can we do? Because we have several different possibilities. So I'm looking here at my calculator about selling calls, and I say, okay, one of the possibilities is that we are selling calls right at our strike price. So what does it mean? If we would sell these calls we got assigned at $45. Oops, let me just change my pen. $45 with 4 days to expiration until Friday. I could sell 44 contracts against my existing shares with a strike price of 45 and receive 85 cents for it. So this means that I collect a very healthy premium, but I would not make any money on the stock if Devon Energy keeps rallying, because this morning it jumped. There are some news that Israel is at war. So the conflict, the Israeli-Palestine conflict is escalated over the weekend. And this is why oil jumped higher. Now, let's talk about another possibility here. I could just take a look at Devon for this Friday. And I could say, okay, what if I sold a strike above my assigned price? So this here is where I'm getting right now 75 cents because it has rallied a little bit. So let's take a look at this. And the stock purchase price was 45 right there. So let's compare these two, and let's also get current quotes for the 45. This morning I sold it for 85 cents, but right now it is $1.32. Okay, because we want to compare apples to apples. So Devon has been rallying a little bit, up now almost 5% for the day. So here are the two scenarios. Scenario one is where I'm selling calls against exactly my strike price. So I'm making $0 on the share, but I'm getting some really good options premium. Now, here, on the other hand, if I'm selling calls one strike higher, I would make $1 per share traded. So that's $4,400 for the stock, and I still collect a very healthy premium. So This would give me combined between the premium and the gain in stock $7,700. Now, we briefly talked about it last week, right? I mean, first of all, $7,700 is more than 5,236. So why wouldn't I go with this? Well, that's where it's a little bit the bird in the hand versus the two in the bush, where you might have heard this, right? Here, I'm keeping this premium, no matter what, right? Because at this point, if Devon stays above 45, I get called away, we're fine. Here, if Devon stays between 45 and 65, or let's say below 46, sorry, before below 46, I'm only getting the premium. I'm not making the additional money on the stock. So let's talk about it. Why am I at all making money on the stock? Well, here's the deal. If you are selling calls against your existing position, it means that you're choosing a strike price, and now you have an obligation to sell your shares at the strike price. So let's say I'm selling the 46 and I got assigned at 45. So you buy at 45, you sell at 46. This means that you're making a dollar per share. But you're only getting called away if Devon Energy would move above 46. Now, looking at the chart here today, you might say, oh my gosh, look at this. We already rallied today from Friday 44 to right now 45.82. Yes, I'm certain that it moves higher. Well, if this is the case, you might want to sell this. You get a little bit less in premium, but you participate in an upswing of the stock if the stock keeps rallying. So the two different scenarios, and this is where we could even look at another scenario. So let's actually see what happens if we would not only sell the 46, but if we would actually sell the 47 strike price. Because now we make even more money on the stock, right? So we only get 37 cents in premium. So the total premium that we receive here, and let's just zoom in and take a look at this, right? The option premium, the premium from selling options, is highest in scenario one, where we're selling the 45 strike. In scenario two, it's the second highest premium. We're selling against the 46. And in the third, we're selling against the 47, and we are receiving the lowest amount in premium. But this is where we're looking at the gain from the stock. In scenario one, it is $0. Scenario two, it's $4,400. In scenario three, we're making $2 per stock traded, it's $8,800. So here, the total profit in this scenario would be 5,808 here, and the total profit is the 3,300 plus the 4,400. We would make $7,700. Here, we would make $10,000. But this gain from the stock only happens if the stock moves above the selected strike price. So I only get the $4,400 if we're moving above 46. Here, only getting it if you're above 47. So as you can see, this where as a trader, you have to make a decision of either extracting the maximum premium possible or hoping that the stock continues to rally. So you might be wondering, what exactly did I do this morning? Well, I chose scenario one. However, this morning, if we are looking at a 5-minute chart of Devon, we see that at first we opened right here, moved a little bit higher, and came back. And this is where at this point I thought, well, it is possible that we could maybe fill this gap, that we could move lower. Now, in hindsight, we are all the greatest traders. In hindsight, I should have just waited until now. And if I had waited right now, I would have received $1.35 in premium. This morning on this retracement, I sold the call for 85 cents. And even this gives me a pretty nice premium. So if you're going back here and I'm putting my actual fill in there, we see it is 85 cents. So that was a very nice premium that I'm okay with it. Now you might be wondering, why did I choose the 45? Well, as you might have heard, or I just mentioned it, we do have the geopolitical tensions in the Middle East, and this is affecting crude oil. So, crude oil this morning is a little bit all over the place. So, oops, if we take a look at this, so from Friday, crude oil jumped up, was trading as high as almost $87, as low as $85, and is now trading at 86.10. Now, with these tensions in the Middle East, I expect crude oil to remain volatile. And that, of course, is affecting stocks like Devon Energy, right? So, this is where I don't want to really hope that Devon Energy is moving higher. If you go back here to PowerX Optimizer, this is where, even if right now you see after this big jump that we had in Devon Energy, what if it moves lower? I would keep the premium regardless. And this is why I decided this morning to go and sell the 45 against the shares that I bought at 45 cents. So anyhow, I just wanted to show you an example how the wheel strategy works. And see, especially when trading the wheel strategy, often traders say, well, why don't you avoid assignment by rolling these puts from Friday, right? So that I would avoid assignment. Well, because then I would have missed out on collecting $85 per contract traded. And you see, for me, this adds up to a pretty good chunk. And this is why I love trading the wheel strategy and I love getting assigned. By the way, my friend and head coach, Mark Hodge, he did the same with Goldman Sachs. So he got assigned in Goldman Sachs and he traded the 312.50. So this is a put that he traded last week. As you can see, it was actually interesting. It came down to the wire. On Friday, Goldman Sachs closed at 312.48, 2 cents below his assigned price. So this is where assignment is not guaranteed, but it happened to him. And this morning, as Goldman Sachs was trading at 311.02, he actually sold calls against his existing position. So let's take a look at this, what this looks like. So if you're adding another column here and enter Goldman Sachs as a ticker, the stock purchase price for Mark was 312.50. Selling short-term calls here with only 4 days to expiration. I don't know how many shares he has. I just put 100 in here right now. And then the strike price, he sold it also against the existing strike price. So let's see how much money you could get right now. And I think this morning he got $3.30. Here it's $3.40 right now, so went up a little bit. And this is where on an annualized basis, because the position value, if he had traded only 100 shares, would be 31,250. And if you make a $340 premium in 4 days, on an annualized basis, it gives you 78%. So as you can see, trading the wheel can be fun. It can be fun. The important thing is stock selection, that you're selecting stocks that you're comfortable owning. And this is where we did a session previously. So in the archives here on the Tradier Hub, you can see of how I like to select stocks, what are my exact stock selection criteria. All right, so that's what I wanted to cover today, to just show you how I trade, what happens on a Monday morning after I see that I get assigned. I hope that you're enjoying these show and these little tricks. And if you can, try to be live here and leave a comment right here while we are live, because then we can address it, we can chat, because after all, this show is called Coffee with Markus. Now, if you're leaving a comment when the show is over, I might not be able to go to this comment and respond to you. So in this case, I highly encourage you, show up the next time live every Monday at 11 o'clock Central Time or 12 o'clock Eastern Time, depending on the time zone that you're in. And let's talk about trading and have a coffee. Now, I hope that you have a good day. Enjoy the rest of the day, and we'll see you next Monday.